Good evening, friends, and welcome back to the Money World. It's been quite a long time since I recorded a video, and now we are, past the effect of Corona. We are moving rapidly to normalcy. Last 6 months have seen many of the sectors coming back into the pre-corona activity levels, and one of the sectors that was primarily affected or most severely affected during corona was of course the hotels business, because during the lockdowns, travel was practically leisure travel as well as business travel was practically shut down, and therefore you saw that many of the hotel stocks just plummeted. Many of them closed down. Many of them are now starting back with a vengeance, and we already have several stocks in this segment. If you start from the premium five-star hotels, we have Indian hotels and East India hotels, which run like chains like Taj hotels, etc. If we come down one notch and focus on the kind of the budget segment, which consists of budget business hotels and budget resorts. Then one interesting stock that catches your eye is Lemon Tree Hotels Limited, and we will go to the salient features of the stock in just a moment. Before that, the disclaimer that this video is for educational purposes only and does not constitute a recommendation to buy or sell the shares. I, the presenter, hold a small quantity of shares in this company. Therefore, anything I say about it may come with a certain amount of bias. I have shared the links to the investor presentation and the results, which we are going to see now in a brief moment. You can go to these and download them yourself. The investor presentation is a very detailed one, and it contains a lot of comparisons. And they have actually compared it with the last pre-COVID quarter, which was can be assumed to be a regular quarter. So compared to that and today, how they stand in terms of their revenues and especially in terms of their costs. So this was an opportunity for a lot of hotels to rationalize their cost structure, and Lemon Tree claims to have done that. So let's go to that in a minute. Of course, the statutory results also we will see and look at the EPS and other numbers. Looking at the September results, the quarterly and the half yearly results, what we notice is the expected quantum jump from uh, 21 over 22, of course, the COVID effect, and similarly for the half year. What we notice at the bottom line is that the uh, hotels are back in a profit. So here, if you see 0.21 uh, per share, which translates to roughly like one per year. So if you consider the share price of 70, it gives a quite a high P right now. But the expectation we have is as we go ahead, uh, things will improve. And let's see the other presentation about that. So I really like the way this has been presented, and very detailed metrics have been given. But an interesting thing, if you see, is Lemon Tree is currently operating, and there are two ways it operates. One is its own hotels, which it owns, and then the others is where it has a kind of a service agreement, or what we popularly called as a franchisee, and the franchisee hotel operates on the service levels of Lemon Tree and pays some kind of a commission to uh, Lemon Tree hotels. So we have like currently they have 8,300 rooms and 85 hotels, which is likely to go to 10,900 by FY25, so roughly in two and a half years time. And the hotels that are going to be added are in both the categories, so the own hotels as well as the uh, franchised hotels. Now, if we look at the brands, there is an interesting mix of economy and premium. So, Lemon Tree, Red Fox, Keys are the kind of bare bones hotels, whereas Orica is a recent brand they're developing for bigger, better, and much more luxurious hotels. Now, here, if you see that the comparison has been done with the last pre-COVID quarter, that is Q2 of FY20, that is the uh, period ending September 2020. After that, the COVID effect gradually started, and therefore, it was not a kind of an apple-to-apple comparison thereafter. Now, if we look at here and compare it with the Q2 of 20, we can see that they have almost got back all the revenues. Now, occupancy is 66%. So, the sad part is that, they don't have much leeway in terms of increasing the occupancy. Now, my understanding is that the uh, overall if occupancy of a hotel over the year would be around 75%. So 75 to 80% is a really good occupancy factor, and they are coming close to that. So probably a few more points of improvement may add directly more to the bottom line, because the fixed costs are already covered by this. So any additional occupancy is going to add significantly more to the bottom line than to the proportionately to the top line. So here we see that it has broken into a profit, whereas Q2 was still at a loss. So we must remember that Lemon Tree is a relatively new chain, and they are also experimenting with different formats. And hotel is, a very capital intensive industry, as we all know it. So it's not it's it has a huge uh, mm, time to start paying back, because the construction times of hotels are usually large, and it will take a while for the hotel to pay back. So these metrics present an interesting picture, and what is interesting is that now they seem to be getting their act together, and they are really now start focusing on the profitability. So they have reached a phase where they are more in a stable kind of a business, more focus on growth, more focus on margins. And here they have given up the breakup of the revenue per person. So here, uh, uh, if you look at 4,600, I would say it's still low for the premium category, whereas the lower ones have really low revenues per passenger. So considering that this is in a kind of a different segment, you know we really don't expect to have very high margins, but the 20% increase that is going to happen over the next 2 years should really add a lot to the top line and the bottom line. Monthly occupancy is a very critical, crucial factor in any hotel. And as I said, now that 67 is probably a kind of a little over the break even point, and any further occupancy levels would definitely add to the more to the bottom line than the top line. But one must remember that during the last few years, travel in general has decreased significantly among, especially the software industry, because people got habituated to working from home or over Teams or over online platforms, and therefore the need for hotels is seen as going down. So we must watch for a couple of quarters where exactly is this headed, and whether it is the profitability is increasing or not, whether the occupancies are increasing, how the addition of the new hotels to it is having an effect on all the ratios. Here is the expansion pipeline, and if you look at the rooms and when it is going to be added, so before March 23, we can see a significant number of hotels becoming operational, and then we have some more planned in 23, 24, and then a few more in 24, 25. But a very big hotel is coming up uh, in Mumbai airport. So I guess we have this is the pipeline of management contracts, and this is the hotels under development which is owned, and this is 669 rooms near Mumbai airport. That's a huge hotel, and that is expected to become operational by CY 23. CY is what current year 23. So let's assume that I guess it's become operational after 1 year. So the probably the third quarter of 23-24, and then we have the Shimla Hotel, whose opening is not yet announced. So I will keep a track on this share, and uh, probably have another video after the current quarterly results are out, and that would provide some more indication of how the occupancy and the different ratios are faring. So thank you for watching Money World, and do let us know your feedback, and hope to see you soon.